And we go straight on to the business news for you on the programme. For that, we're joined here in the studio by France 24's business editor, Brian Quinn. He's starting today in the US with yet another meeting between President Biden and Republican lawmakers in a bid to head off the looming debt default, Brian.
Well, Stuart, Biden is set to meet with congressional leaders at the White House Tuesday, with time running out for a deal to raise the U.S. debt ceiling. Now, Republicans are demanding deep spending cuts in exchange for raising America's borrowing limit, which currently stands at $31 trillion. U.S. Treasury Secretary Janet Yellen on Monday reiterated her recent warning that the government could run out of cash to pay its bills as early as June 1st. The latest negotiations coming at a particularly sensitive moment as Biden is preparing to head to Japan for a summit of the G7 group of the world's top economies, all of whose financial systems could be thrown into chaos if the U.S. does default on its debt. Republican House Speaker Kevin McCarthy says the two sides remain very far apart from an agreement. Here he is.
Look, if this was where we were in February, we'd be in a good place. But unfortunately, the president waited 97 days, and we've got big issues to get to, and we got to get through the House and the Senate, and there's definitely not enough progress.
Turning to the markets now, Asian indexes mixed in Tuesday's session as investors take in the latest economic data out of China. Retail sales there were up over 18% in April, with factory production up 5.6%. Both of those figures, though, coming in well below analyst expectations. Tokyo's Nikkei index is up around 0.75%, as the Shanghai Composite down around 0.2%, with the Hong Seng losing around 0.2%. Here in Europe, markets opening down slightly as the European Commission raises its projection for Eurozone inflation to 5.8% this year. Traders around the world keeping a close eye on those U.S. debt talks. Earlier, France 24 spoke with markets analyst Han Tan about their expectations.
Those concerns are there, but I think they're more notable in the bond market rather than stock markets. But overall, keep in mind, this is not the market's first rodeo, so to speak, right? Every few years or so, we do get this barrage of headlines about the risk of a U.S. default. But after all that political wrangling, both sides eventually reach a deal. Now, to be clear, it's still a risk worth watching, but a U.S. default isn't the base case for many investors who have been willing to, for the most part, look beyond these headlines for now.
The European Union has approved a bid by Microsoft to buy U.S. video game giant Activision Blizzard, saying the deal represents an improvement for cloud gaming. The $69 billion takeover could still be thwarted, though, by regulators in the UK and the US, amid concerns that it might stifle competition and mean less choice for gamers. Karis Garland has the details.
It's one less hurdle for the biggest deal in the gaming industry's history. EU regulators gave the green light for Microsoft's $69 billion acquisition of Activision Blizzard after Microsoft addressed their concerns on competition issues.
The European Commission has required Microsoft to license popular Activision Blizzard games automatically to competing cloud gaming services. This will apply globally and will empower millions of consumers worldwide to play these games on any device they choose.
Regulators had been concerned that Microsoft's Xbox console would have a monopoly on Activision's hit franchises like Call of Duty and World of Warcraft. In recent months, though, the tech giant has struck agreements to bring Call of Duty to competitors' gaming platforms should the deal go through. However, these promises were not enough for regulators in the UK. The Competition and Markets Authority blocked the takeover bid last month and on Monday said it stood by the decision.
Microsoft's proposals would replace a free, open and competitive market with one subject to ongoing regulation of the games Microsoft sells, the platforms to which it sells them, and the conditions of sale.
Microsoft has until May 24 to appeal the CMA decision, but even then it could still be game over. The acquisition also faces opposition in the US, where the Federal Trade Commission has launched legal action to block it.